right, happy Wednesday, everybody. Today is day 12 of paying my bills with dividends. I'm Joe McKiddish. I guess I'll do a little quick intro. A couple people were like, dude, you didn't do an intro in the last video, and I'll do that. So, yeah, my name is Joe McKiddish. I own Blue Collar Connect. It's a mastermind for contractors. I teach them about business topics. So everything from customer acquisition, customer service, hiring new people, building great teams, and building highly profitable businesses, all that good stuff. So really that's what my day job. I do investing because I pay all my bills with dividends, and it's been great. And this is just kind of my little, I'm going to have fun video recording my journey on how I would do it again. So somebody asked me the other day, I guess it was probably a month ago, how would I do it if I had it to do over again? Would it be different? So this is kind of that video. So these videos that I'm making is how I would do it again. So, and I figured instead of talking about it in theory, I would just do it. So, the cool thing about these videos for me is it's really entertaining making them. Number one. Number two is I can go back and look at them and go, what would I have done different later? So this strategy that I'm using is my own, research from lots of my own experience, with my other investing portfolios that I have, testing different things out, and then of course doing my own research. So I strongly recommend that you do your own. Your investing style and mine are completely different. I'll give you an example. Like my dad, he's 401k, IRA, retire, do the 4% thing. He's got a pension. He's got that stuff going on. I'm completely different. I don't have any of that stuff. And I live my life on dividends, and 20 years sooner than he retired, then I'm able to retire if I wanted to, but I don't want to. I prefer to work, and I prefer to make more money, and I prefer to do cool things with my money. And that doesn't just mean like I go on trips and buy cool things. It's, who can I help with my money? That's a big thing. And, somebody asked me the other day, they're like, Joe, why do you want to keep making more money? And I can't help all the people I want to help. I can't do all the things I want to do. And I think a lot of us are in that situation. If we were at a nonprofit gala and they needed 10 grand to support some kids, and you had the 10 grand, you would give it to them, but you don't have the 10 grand. I've been in that same position, and I prefer having the 10 grand if I want to. So that it just works out better that way. And what if that 10 grand never ate into your principal and you could pay it out of your dividends? That's way better. That's what I'm talking about here. So that's how I live my life. That's just how I do things. And if you're interested in following along with that, keep following along. If this is not something you're interested in, then don't watch it, I guess. So with that, I'm going to go ahead and share my screen, and we'll get into the strategy that I'm using, and then we're going to get into some investing. And then, as I promised yesterday, we're going to go into Snowball and how I use Snowball to kind of look at what my investments are. And I'm going to look at some things that people sent me yesterday, and we'll look at those versus some other monthlies, and we'll do a little bit of research together. All right, let's get into it. All right, before I start going into this strategy, I got two things. Number one, I'm not a financial advisor. This is not financial advice. I am only sharing my own personal investing journey. Somebody asked me the other day if I was ever going to become a certified financial planner, and I said absolutely not. Most of the ones I know, and this may just be the big companies screwing it up, most of them I know sell products to people that they don't need, like life insurance, annuities, and those kind of things, because they got to make a quota. And I don't sell on quotas. So, I just live my own life. I manage my own money. I don't manage anybody else's, and I don't tell anybody what to do with their money. Whether you want to invest your money this way or, into a 401k or an IRA or a Roth or whatever it is you want to do, that's up to you. It's your dang money, not mine. So with that, let's get into my strategy here. And somebody asked me last time what cigars I'm using. I don't know if you can see this, but I haven't smoked one of these in a long time. This is a Plasencia. These are pretty fantastic cigars, Nicaraguan, I believe. I'd have to look it up. I'm sure it's from Nicaragua, but it's got the flavor of it, and they're pretty good. And somebody gave me a couple of them, so I'm smoking one. I'll always take cigars if I do a favor for somebody, and they're like, "Hey, I want to pay," and they give me a couple of cigars. Sounds fair. We'll do that. Exchange of energy. That's what it is. All right. So let's get into strategy here. So this is my strategy number 7. The reason it's number 7 is I've had 6 other strategies that I've done. And I'm actively testing in another account to see if I'm going to come up with an 8th one. I may not. I may call this one good and never do another one. But this one is a culmination of everything I've built, plus some of the new tools that are available, new ETFs and new tools like Snowball analytics and that kind of thing, didn't really exist when I built my number 6 strategy, number 6 portfolio that got me free. So on free to live my life on dividends. So this portfolio is going to be a little bit different, using some different strategies, which I'm going to go over. All right, so up here at the top is what I call my wealth snowball. So these are all my personal bills that I have. People are like, Joe, that's not wealth. I'm like, well, I define wealth as this, is all my bills are paid for with passive income, and I can do whatever I want with whoever I want, whenever I want. And if that's the case, then you're pretty wealthy. So if all of your bills were paid for passive income, I would consider you wealthy. So same thing for me. So this is all my house bills, what I call my house bills, even though there's car payments and car fuel on there. But I could stop doing everything else and just live on this, and I'd be totally fine. So kind of that's so the way I did it is the lowest monthly bill down. So it's kind of like the debt snowball from Dave Ramsey, but kind of opposite a little bit, where I'm taking the opposite is that I'm not paying off debt. I'm paying off active, like your bills, with passive income. So I even believe if you had credit card payments, you could put it in here and say my credit card payments are $600. I'd rather invest all the money, pay the minimum payments, and then keep my cash rather than paying off the credit cards. That's just me though. So people are like, oh, it's but 30% interest. I'm like, yeah, but I want my cash and I want my cash flow. So there's that. All right, so that's just me. You can choose to do whatever you want. All right, so here's all my bills. Adds up to about $8,580 a month. And the way I'm going to do this strategy, I'm going to use some weekly paying ETFs. The goal there is a 35% return, and you guys are going to see a little bit of things are a little out of whack today because of the peace deal with Iran yesterday. Stopped last minute. Kind of blew up the market in a good way, I guess, for some people, and a bad way for others. A bad way for me because I like buying stuff on the cheap, and it's been cheap the last few weeks. So with the Iran thing going on, and now that I think it's over, the stock market's going to go on a tear, probably a little pent up demand happening, and people are going to start buying like crazy, and it's going to drive everything up. And you're going to see that kind of in real time here in a minute when we go over the portfolio. All right. So the shares of the weekly payers will be bought evenly per number of shares. So I'm going to buy one of them every single day, which means I'm going to have to dip into some margin, which I'm going to go over here in a minute. I'm going to invest $300 a day into the weekly payers. So this is my money. I'm putting right in $300 a day, and then I will reinvest those dividends back into them until I've reached $400 a month in distributions. So once I'm doing $100 a week, then I'm going to add in some monthly payers. And then once the monthly payers come into play, I'm going to invest 50% of distributions into monthly ETFs and monthly payers, because some of those might not be ETFs. Some of them might be REITs or BDCs or who knows what. We're going to find out. All right. So then I'm going to put 50% back into the weekly payer. So 50% will go into the monthly, 50% go into the weekly. And then I will use margin once the account has reached $2,000, which I did on the 1st of April. So we're actively using margin every single day to speed this process up. And then once the weekly payers, this is why I'm using Robinhood, is because with their margin rates of being 5%, instead of 10% from Schwab, and some of the other ones like Fidelity and E-Trade are higher, I wanted my margin rate to be lower. So at 5%, that makes a lot of sense to me for this strategy. So I'm using Robinhood here to use margin to speed this process up. So if you don't know what margin is, kind of go back to some of my other videos. I go over it, but we will get into margin deep on one of these videos coming up, and especially when we start using it hot and heavy, like a lot. All right, so once weekly payers, I went over this. I'm going to split the money between the monthly, so once I've reached that $400, the $300 will also be split between the weekly and monthlies. And then shares of the monthly payers will be bought evenly per number of shares. So I'm going to buy one of those at a time. And then the goal here is to get a 10% return on the monthlies 35% return on the weeklies. And then the monthly payers are what pays my personal expenses. So I'm on day 12 now. I haven't even started buying the monthlies yet. So this ticker is at day 12. So we'll see how many days from inception it takes me to hit that $60 a month in dividends from the monthlies. And then what I believe what will happen is in the amount of time that it took me to go from 0 to 60 to add another 70, it'll probably take half the time. So this process will speed up significantly with the dividend reinvesting in the snowballs. All right. So that's kind of what we got here. All right, here's the portfolio I'm using. By the way, if you didn't look at the description, the links to every single thing that's in here is in the description. So links to these sheets, links to my strategy, links to sign up with Robinhood if you want to get a gold account there, like I'm doing, you can. And then links to a discount code for Snowball Analytics. So every single thing that I'm using, every sheet, every tool is all in there for free. And I need a lot of coffee today. I'm like, it's cold outside in Idaho. I woke up this morning, I think it was like 40 degrees, and sat down in front of this fire, which feels pretty good. But yeah, I'm drinking coffee like crazy. All right, so these numbers, the dividend yield estimated is changed significantly, and I need to go in and update those, and I'll do that today. But you can kind of see a couple things here. One, I've got some crypto stuff with blocks, the ETF from Nicholas. Round Hill, I've got 4 funds up here. One that pays on Monday, which is Maggie. Blocks pays on Monday. So this is Magnificent 7, so that's tech. POTW, that's also tech and AI, I guess. And then Robinhood, I put HOW in here, which is a weekly payer that pays, the underlying is Hood. And the reason I put that in there is because I'm using Robinhood in here and I thought it'd be fun. So that's why I'm using that. And then Top W is the Round Hill's weekly pay universe. They're top ones. So they're more actively managing it than they did when it was, W pay. So Top W, well, I hope their new strategy works. I think it will. We're going to find out. And then I've got Rec Shares, they're Tesla as an underlying, and they have one that's got an NVIDIA as an underlying. And these are supposed to grow as well as pay income. So far, they've done well on income. I'll give them that. So whether or not they can get the growth thing sorted out, or if it's just the underlying kind of sucks, I guess we'll find out what the deal is there. All right, and I've got a couple Tap Alpha funds. They released these Lyft products not too long ago. I've had T-SPY and TDAC, which is their underlying ETFs. I've had those for since inception, and then these ones are their weekly payers using the other ones as their underlying. So it's kind of an interesting strategy. I don't know whether it's going to work long term, but we're going to find out. And then Chippy, which is a semiconductor. So I've got some broad market stuff in here, with TDAX and T-SPY. I've got a lot of tech in here, obviously. And then I've got crypto in multiple areas with the Ethereum and Round Hill's Ethereum product and their Bitcoin product. And then I've got semiconductors. So we're spread out across a couple things, but we've got some overlaps. But I think it's going to be fine long term, but we're going to find out together whether or not these things hold up or not. Number one comments I get is, Joe, you're going to lose all your money on this stuff. And I guess we're going to find out. All right. So, all right. So the monthly contenders, these are ones that I'm looking at as potentials for the monthly pay side of things to cover my bills. And so you've got, I've got some broad market stuff from Neos. I've got, whether it's NASDAQ, S&P, Russell 2000, energy, infrastructure. I've got almost every other market here. I've got real estate, gold, crypto, you kind of name it here, credit. I've got a BDC in there now. I've got a REIT in this list. So down here, I've got, Dynex Capital. I've got Capital Southwest. I've got some AI stuff. I've got OMA, which is VistaShares targeting Target 15, tracking the Berkshire select moves there. So, and I got semiconductors again. And then down here, I just added these ones in based on comments that I got from other people. So I haven't put the links in there yet. I just put them in while I was out and about yesterday. So I saw those comments and I just put them on the list, and I'm going to research those, and we're going to go into Snowball Analytics. I'm going to try and give myself a little bit extra time here in Snowball to mess with these, so we can research a couple of these and say yay or nay on them. All right, dividend payouts. So got a couple more dividends today. Top W. Let's go over to Robinhood and you'll see where these are. So in here, I go to account and then down to where to go. I just history, and then and then here's the history here. So I've added my $300 in here. You can see that, and then my top W paid $203. The TSII paid $2.09, and NDII paid $2.10. So they're right in there with each other. So I added those in here, and then you can see I'm now up to $28.87 in 12 days. So, which kind of seems funny, but also that's pretty badass, actually. So, with the amount of money I'm investing and how fast this is going, I'm pretty excited. So we're going to find out if it gives us a speed boost on the monthlies or not. But so far so good. I'm almost up to $30. We'll surpass that pretty massively tomorrow. Actually, tomorrow's going to be a big day for payouts on these. But today was pretty good. I made $6, a little over $6. What is that? $6.22. So pretty good for day 12. So we're gonna go with that and say we're excited, and that's the payouts here. I'm gonna make this bigger because I'm so excited about it. There we go. Now we're getting it done. All right. So in Robinhood, oh man, the market is nuts today. So you'll see that I have $177 in cash. I moved the $300 in, which paid off the margin balance that I had accrued yesterday buying one share of everything. And I did change the view here just so it didn't, it wasn't so annoying. But you'll see since inception, since I started this account, I'm up $125.70. The vast majority of that is coming in the last 24 hours. So, that whole thing with Iran, as I predicted yesterday on the call, or on the video, as soon as that Iran thing came to an end, our funsies of buying in the red was going to go away. So I've still got a couple that are in the red. TSII and PLTW are still red, but everything else is now green as green can be. So if you look at that, what that's done to my portfolio, it's been kind of crazy. So let's actually change this view over here and see what the last day did for us. So the last day increased our portfolio by 2.62%, and that up until that point for the last week we were actually down, and then since inception, since we started this, since we've been doing this less than a month, I just put it on the 1 month view. We're up $126.20, and that does not count the dividends in there. So we're going to go over to Snowball here in a minute after we get done investing, and we're going to look at what our total return is with the dividends invested. All right, so let's go ahead and buy one share of each one of these weeklies, and then we'll go over to Snowball, and we're going to go update it, and then we're going to get into how to do some research here at the end. So if you don't want to see me invest any money and just want to get to that part, feel free to skip ahead or do whatever you want. All right, so blocks, as you can see, it's $14.07. But the ask price is $14.15 and the bid price is $14.06. Because it's a green day, the bid price is not going up properly. So or it's not going down to where we want it to be. So we're gonna try and buy it for $14.07 and get it punched through. All right, I turn up my sound. That way we can hear it. All right, so I almost bought a share of Berkshire. I don't want to do that. All right, Chippy. As you guys can see, that Berkshire B partial share is because Robinhood gave me $5 worth for apparently somebody signed up as a member using my link, and they gifted me $5 worth of Berkshire B. So greatly appreciative of that. And we'll always take $5, whatever $5 I get through that kind of thing, I'm going to add it into this investment strategy. So it's not going to go to waste, or I'm not going to spend it on cigars or anything. I'm just going to put it right in here. All right, so let me move this thing out of the way, get the controls out of here. All right, we've got Chippy blocks. Let's do HOW. I'll just do a limit order, and let's see if we can get these to actually go through for even a penny less. Sure, that one did. All right, sweet. Got it less than what the actual price was. The bid price was right on it. You know, the bid prices on these are butted right up against them. So this one bid price is 45.32, and then current price is 45.37. So let's see if we can get it for 45.32. You know, I'm not sure if we will, but we're going to see if we can get it to go through. All right, NBII. See if we can get this one to go through. 24.67 is the bid price down here. 24.70 is the ask. I'm going to see if I can get it for 24.68. See if we can get it for a couple pennies less. I've been pretty successful at doing it over the years, getting these down. In fact, yesterday was a red day, and I was able to move my cost per share down pretty significantly, which was good. So 25.16, 25.18, we'll go with that. Instead of the current price is 25.25. We'll see if we can get it for cheaper than that. PLTW, TDAX. Wow, this one's a little off. So this one is the ask price was 21.44, and the current price, as you can see, is 21.33. And the bid price is 21.32. So let's see if we can just get it for 21.33 and not have to pay more for that thing. But like I said, the market's increasing by the minute over here. I did give it a couple hours today to see if it would calm down a little bit. I think it was just pent up demand. Everybody's like, "Oh my gosh, this is great! Let me just go buy everything I possibly can." So, all right, what I just go through? Top W, yeah, Top W went through. TSII, we'll go ahead and increase my position here. Even TSII is up. So, and I'm not sure why, Palantir, the PLTW looks to be down. That's the only thing that's down today. That's it. So everything else is up. And I'm not sure why Palantir is down. You know, that there must be some news out there. I'll have to go research it later and find out what's going on with Palantir. The thing about it is Palantir is pretty awesome as far as a company is concerned. Whether or not PLTW takes advantage of that or the stock market, because there's a lot of political stuff around Palantir. With their software that's in different cameras and different technology tools that the military is using and the police are using. So there's some people out there who don't like Palantir, but as a technology company, what I'm looking for is not whether or not what they're doing is ethical, but whether or not I'm going to make money on it. So, all right, I think I got an order in for every single thing. Let's get these to punch through. Let's move these up a penny and see if they'll go through. Oh man, this the market is absolutely bonkers. So just since I put that in, it went up. It went up. So let's see if we can get it for 29 or 59.22. This one went up significantly. So the bid price is now 45.37, even though the current price is 45.30. I'm going to see if I can get it in between. And I don't think I will. I think it's just going up too fast. I think that Robinhood's screen is not keeping up with the price increases. All right, that one went through. All right, so we're back to PLTW again. Let's see if we can get that one to go through. It's now up to 25.25 with the bid price of 25.24. So we might just buy it at price and just say, oh well. Plus it's 25.25. If it goes through at that price, I'm not too unhappy. That's a fun number. TDAX. All right, 21.33 is the current price, but the bid price is 21.44. Let's go ahead and increase that by a penny and see if we can get that one to go through. TSYX. And this one's gone. All these are just on a tear right now. So I hate buying on green days, as you guys know. It's one of my least favorite things to do in investing is to get in here and buy green days. But sometimes we have to if we're dollar cost averaging. I mean, that's the whole game is we We're not trying to time the market. I am a lot more excited. I am a lot more excited to buy on red days. I'll tell you that. When I come in here and everything's down, I'm like, ooh, I'm buying my freedom for cheap. So that seems way better. But today there are no discounts on anything. So 59.22, 59.16. So let's go up a couple pennies on that. All right, that one went through. Let's get Maggie. 25.33 is the bid. 37 is the current price. So let's see if we can get it for cheaper than that, which we did. PLTW, we're going to replace this. 25.29 is the current price, and then 25.24 is the ask price. Let's go up a penny and see if we can get it to go, which I don't think we're going to be able to, because I'm surprised Palantir, because it says it's down. So, I'm surprised it's not going through, but it's fine. So TSYX, let's go ahead and do that one. Let's add 2 pennies to this guy and see if we can get it for 1 penny less than the current price, which we did. All right, so blocks, current price is 14.15. I'm at 14.10, and then bid price is 14.11. Whoops, and then ask price is 14.20, which I don't want to pay 14.20 for this. But let's see if we can get it for 14, 2 cents less than the current price. I don't think so. So PLTW, current price is 25.29. So let's just go a penny less. See if we can get it to punch through, which we did. TDAX, current price, let's see, 21.39. I'm at 21.35. I think we can get this to go through for 2 cents less. Let's get it for 2 cents less, everybody. Let's do it. I don't think so. Everybody's wanting to get me as tight as they can, right? So 14.16, 14.15 is what I'm going to go in at now and see if we can get that for 1 penny less, which we did. And I think we're going to have to do the same thing on TDAX and do 1 penny less than what the current price is and see if we can get it to go. Man, that's being stubborn, isn't it? All right. So I think we're going to have to pay actual retail price for that. So maybe higher, because it's still not going. So we got it to go, got everything else to go for a penny less or right on it. And this one is 21.39. Current ask price is 21.44, which I don't want to pay, but I got to buy one of every share or one of everything. So I got them all to 13 now. That went through, and that did change my buy-in price a little bit. So not too happy about that, but what are we going to do? So I'm still up a little bit for the month. Let's go to Robinhood real quick. I'm going to go ahead and close it, or not Robinhood. Let's go to Snowball real quick. So as of yesterday, I was at $1,404 in dividends annual projected. Let's go ahead and sync this and see what we can get this thing up to with one more share of everything. And I've been on the cigar today. I haven't been having to relight it every 5 minutes like the last couple days. So, all right. So we get this synced up. We need to get some coffee. Celebration coffee. That's what I call it. All right. So got my shares in here. Let's go ahead and do a refresh and see where we're at. So we should be close to 1551 or 1521. So that's pretty awesome for 12 days of investing. I'm at $1,500 in annual income. So as you know, I'm trying to go after $400 a month, which would be this is almost 4 months worth of that $400. So tomorrow I'll be over that. So we'll be officially 1/3 of the way there tomorrow. So we're real close to 1/3 of the way today. So total amount I invested is $3,900. That $9.96 is that the stuff that Robinhood gave me. So when I signed up, they gave me a free share of Berkshire, and then when somebody else signed up using my link that's in the description below, they gave me $5 more. And so if you sign up for Robinhood, I would love it if you would use my link, because then I'll take that $5 and put it in here, and we can see this go $5 faster. So that'll be fun. But that's where that extra money came from. kind of skews the number slightly, but you can see how much my total profit is. I'm up today. Yesterday I was down, so I'm up $112.77 in the portfolio as a whole. So doing pretty good. I'm going to come over here to analytics real quick, and we're just going to go look at a couple things. Number one is, I used margin. So I'll go back over to Robinhood real quick. So I'm down $143.16 minus, and so that's margin I'm using so that I can keep on buying one share per day. So I'm dipping into margin a little bit deeper every single day, but that's okay. We knew that was going to happen, and I'm going to do it even more. I'm going to do it a lot more when we get into using the monthlies. So because I'm still going to want to buy one share of every one of the weeklies, and I'm going to want to buy one share of each of the monthlies eventually. So once that happens, then I'm going to have to be using margin pretty heavily. All right. So so in here, let's take a look at things. So TSII is still in the negative even after the share price growth today. But everything else, Palantir, PLTW is still down as well, but everything else is in the green and solidly green. So some of these have grown more than others. So obviously the Berkshire B share has not grown much, but if you look at blocks, up almost 6%. And that's the thing about these weeklies. They can swing massively in a short period of time. Chippy's up 6.43%. That's a massive swing in just a couple of days where it went from it's like doing okay to like it's crushing. So it can also swing the other direction. It can also swing the other direction with these weeklies. So be careful if you're investing in these. I only invest money into weekly ones that I can afford to lose 100% of. It's kind of like I always give the example. Investing in these weeklies is like going to Vegas without the free drinks. Still get to smoke cigars, but no free drinks. And don't take money to Vegas that you can't afford to come home without. So same thing with these weeklies. Don't put money in there that you can't afford to lose. That's been my philosophy for myself. Other people ask me about these weeklies all the time, and I'm like, I only put money in there that I don't give a rat's ass about. If I care, then I care about that money. I don't put it in there. I put it in more stable stuff. So, all right, this yellow jacket's trying to get me. All right, so the must be warming up outside. The bees are out. All right. So with that, let's go over to my dividend calendar and see where we're at, and then we're going to get into researching some investments real quick. All right, so last week you can see I did $5.84 on Thursday. Tomorrow I'm going to make $11.72 according to this. So we're going to see if that's true. And then every day every week my account is increasing. So I'm going to make more money on Monday, more money on Tuesday. For whatever is still not showing on current day what the dividends were. Don't like that. It used to always show what I got paid that day, but now it's blank. So I can't see what the trend is. But we can go back to last week and go, hey, I made $3.33 on Wednesday. Today, what I make $6. I say $6.12 or $6.11, something like that. So or 20, I don't know. It was a little over $6. So I almost doubled what I made last week. And then next week it says $7.34. It is going to definitely be more than that because we're going to buy more shares between now and then. So, as you can see, next week's looking pretty sick, and every week's going to look better. Every week's going to be sweet. So I'm pretty excited about that. We're up to over 100. We're at $125 a little over per month. So like I said, we're about a quarter of the way where we said we were going to be B2, which was $100 a week. So we're not quite at a third of what the goal is. So once we hit that, that's going to be pretty exciting, and we're start hitting those monthlies. So I get in here every day and look at this and kind of track it. All right, so let's get into just some research here. So let's go over to our portfolio, and then let's look at QQQI. All right, when I moved those controls, it paused the whole thing, and I had to monkey with it to get it going again. So lost my momentum, but all right, here we are. We'll go QQQI. Let's throw that into Snowball. So I'm just going to come over here and do a search, and we'll put it in here, and I'm going to open that up. All right, things I'm looking for. Number one is What the dividend yield is 14.15%. So let's go back over to the portfolio here and let's do this. Let's change that out. Dividend yield estimated. What did I say? 14.15%. So I've got the dividend yield estimated at 14.15% on that. Now we're going to go see if I'm going to lose all my money with this thing. So a couple things that I'm looking for is I can change the view on this. So in the last year, this fund is up 21.46%. Let's do the last 6 months. It's down 6%. But last 3 months, it's down 4%. Last month, it's down 0.34%. But the last 7 days, it's up. As we know, the market's been going up. But the market's been kind of sucking the last 6 months. And the question is whether I can handle that based upon the history of this fund and what I know about it. So, so let's go look at what happened last April. Let's go back to last April. So April, when the tariffs hit, it took a total dive down to 42.51. On that day, in my main portfolio, I bought like 1,000 shares of that sucker. So I was pretty excited on that day. I dipped heavily in the margin to boost my main account, my main income account. But on that day, Trump said, "Now's a good time to buy," right? And I was like, okay. I took that seriously and went to town on all the monthly payers that I love that were all on major discount. So current price on this thing is $51.64. And so you can see what's happened. I mean, it was doing awesome, cranking. And then April tariffs of last year hit and it took a dive. And then it started creeping up. And then the entire market kind of soured over the last 6 months. So it's not just crypto. A couple of people are like, it's just crypto. No, it's kind of the whole thing. So just crypto is more stark. Like the dive of how big crypto dropped is more visible, which we'll look at some of the crypto funds here in a minute. So I'm looking at this to see if, will I make money on this thing? I think this trend is going to be more consistent the 1 year rather than what I think that year to date is. I think that this is just because the entire market is down. I bet over the next couple of weeks and maybe next month, this will nuke all those losses and we'll be totally fine on that. So we're going to find out though before I start investing in it. We're going to see if this one is going to be doing great. So payout history. So let's go over to current payouts. These are all future ones here. Let's go back to, all right, here we go. So these are the future ones. Here's the most recent one, which was March 17th was 60 cents a share. And then 61 cents, 63. They're pretty consistent right in the 60s range here. So what I like to do is come down here and change this payout history view to monthly and kind of look at this trend, right? So we've had some dips in here. Obviously, the April tariffs. So somebody asked me what would happen to my dividends if the market had a downturn. And you can see right here, it did have a downturn. And what happened to my dividends was they did get cut a little bit. That's why on my account that I live out of, I'm reinvesting 50% and living on 50%. So you can kind of do some math on how much money I got over there if you feel like it. But the reality is these investments, because I'm living my life that way, if there is a dip, I could dip 50% down on my dividend payouts for a time and still pay all my bills. So if I was too close on my bills versus how much dividends I have, if they were right on the number, I would be screwed on it like an April 2025 situation. But I've taken that into account. So I reinvest 50% of my dividends back in. So every month my income is increasing, which is why I like investments like QQQI. That's just my experience with NEOS funds has been good across the board. And some of it's the timeliness and when I bought. So if I bought at the high and then, I would not be as happy with it, but I bought a lot of it at the low. All right. So, when I first bought into it, I should say. So I've been dollar cost averaging into QQQI for whatever about a year now. So right before the April tariffs, I got into it last year. All right. SPY, I'm going to skip over those. I'm going to go, we can all look at the NEOS funds, but let's go look at GPIQ from Goldman Sachs, and we're going to go look at one that's a little bit different looking. So a lot of people get fixated on fund expense ratios. I don't. I think that, whatever they charge for their fund expense ratio, as long as it's not ridiculous, like 2% or anything like that, but as long as it's reasonable for what I think the amount of work is that they put into it, that's how they make their money, right? And so that's how they pay their people. And I'm all about paying good talent. So if they're talented humans that are getting paid to run these funds, then I believe they should get paid for it, right? So if you look at this fund versus what we were looking at with the NEOS fund, about 30% return over the last year with GPIQ. And then you can kind of see, let's go back to the April tariff, what it did to them. Same thing. It went down significantly. I did buy a bunch of GPIQ during that time as well. And then, and you can kind of see fund inception and kind of what happened here, right? So last 6 months, my guess is it's going to be the same trend as what we saw with QQQI, which is losing money on the year to date 6 months and 3 months because the market's been sucking, right? So, and that's fine by me. So this is a 10.13% payer. So not as high as QQQI, but I still think it fits my overall strategy because let's go to back to the last year. So last year overall, it's up share price and it's paying over 10% yield, which is what I'm looking for. And then I don't look at the short term. Like, let's go back to this real quick. So let's go to the 5-year. So if you look at things in too small of a time segment, it could skew your view on things. So if you're just looking at it in this time segment, you're like, I don't like it, like 3 months. This fund's sucking, but over the last 5 years, you're like, 411% from August 19th, when the fund was started, to now it's grown, 411%. How about yes, please on that? So let's go to, anyway, I would love it if this fund, every fund I had did this over the course of a year. So if it grew 30% and paid out 10% dividends, come on, let's go. I'll go with something like that all day. That's just my personal opinion. I like those kind of numbers. All right, so let's go look at the dividends. The dividend from last month was 43 cents, 45 cents. As you can see, this fluctuates a little bit. So, obviously we've had a bunch of stuff going on in the world, so the dividends dipped a little bit, but pretty consistent in the 40s across the board. And then let's go down to this view. I like to look at this view and go to the annual and change it to the monthly and kind of look at where that trend is. So April of last year, it dipped again. It was still down a little in May, but then boom, right back where it was up on that trend of being pretty consistent in there. And you can see that the dividends have been growing. Not massively. It's not massive growth, but this fund, I think most people would say this fund is pretty good. So the dividend yield, is kind of across the board, all the way down to, let's see if we can go back to April of last year. So, during that time, the dividend yield was higher when the share price went down, but it's been pretty consistent in that 9, 10, 11%. So I like consistency in my income funds. So it says that it's been dropping about 2%. So that 2% is down, but you have to remember at fund inception, or back here in when the share price was low in April, the price or what they were paying out was pretty high during that time. So let's change that view to year to date and see, and you'll see that the dividend yield is increasing, not significantly, but at 10% return. And if this continues to grow over time, I'd be pretty happy with this. So I'd say it's probably high on the contender list. All right, so now let's look at one that's a little bit more sketchy, a lot more sketchy. Let's go look at Dynex Capital. So Dynex Capital is good depending on when you bought it. So if you bought it at certain points when the share prices were high, it's not as great. If you bought it when share prices were low, it was awesome. All right, so I'll kind of go over this. I've owned Dynex Capital for quite a long time. I can't remember exactly when I bought it, but it's probably been in the 2022 range was when I first started buying shares of it, and I've been dollar cost averaging into it in my main account since then. And so you can see that there's been a huge share price reduction if you look back this far. But the last year, it's been solid. So, 12% increase in share price, even with the last 6 months of it being down. And the last 6 months has been not looked super awesome, just because the entire market is down, just like we saw with the other funds. But I would expect that this thing is going to continue to pay pretty decent dividends, out. But I can't guarantee that. I don't think anybody can. All right. So current share price is $12.95. The dividends here are $15.75 as of today. Let's go ahead and grab that. Put it in here. So does this one meet my strategy needs of over the last year? I'm just looking at the last year. Did it grow in the last year? Yes. And, did it pay out some decent dividends, or did the dividends drop? So every year the dividend growth, it's growing, even on those. And it does say it's risky. Sure, it's definitely risky. But let's go look at the monthly distributions. So these were higher because, as you can see, they're paying quarterlies. So then they switched to monthly pay in here, and then they did have some dips in here. But as you can see, they've been growing their dividends about since last. Let's kind of look in here, 13 cents. So this one was not affected by the April drop. So April drop happened right here in share price, but the dividends didn't go down. So dividends have been increasing 13, 15, 17, and I'm enjoying those 17-cent dividends on my other portfolio. So I ended up buying shares of Dynex Capital in here when it was 13 cents, and then it stayed 13 cents for forever. Felt like forever, and then they've been increasing dividends since then. Whether or not they can continue those dividends like that, I'm not sure. But until then, I want to keep on loving those dividends. They pay around the first of every month, and it's kind of a nice check that I get from those guys, or deposit I get into my account every single month. And so whether or not this company fits your strategy or not, it fits mine in my main portfolio, and it might fit my strategy here. I do like dollar cost averaging into something like this, just so I can protect myself from these massive swings in price. So back before 2022, interest rates, as were pretty low then. And then as interest rates increased, they dropped. And I expect that when interest rates go down again, we should see these share prices increase again. But I'm not sure. We're going to find out. So, but I do know that the dividends are pretty solid, and they have been for a while. So ever since they started paying monthly, it's been great. All right. So, there's some other tools in here, like financials on whether or not they're doing well. You can kind of see, 2019, terrible year for them. They got their shit together right in here when I started buying shares. And then, like I said before, last year, was fantastic for these guys as far as they made money, and, they ended up paying really decent dividends during that time and increasing their dividends, overall. So, the other tools that you can use that are out there, I will pull up my other tools that I use to research these, and on a future video we'll kind of go into some of those other tools. But at a quick glance, if you just want to go gut check on whether or not a fund looks like something you should research deeper, Snowball's great for that. You can go, okay, share prices are increasing over time or staying pretty steady. Are my dividends increasing over time or staying pretty steady? Which one of those strategies meets my overall goal? Is it best for me to buy closed-end funds that maybe stay steady in price and steady in dividends, or do I want stuff that fluctuates all over the place, like these high yield weeklies, or am I okay with like a slow roll on increasing dividends like SCHD, for example? Let's go look at that. So SCHD, same. The over the last few months, oh man, it's been ripping. As far as their dividends have been increasing. So the last 1 month it went down, but the last 3 months up. Last 6 months up. Last year to date up. Last year way up. 26.4%. Last 5 years again, share price appreciation is up, but 3.34% dividend yield. Does that match your strategy that you're looking for? And by the way, these guys pay quarterly, so I'm not a huge. It's not going to fit the strategy for what I'm doing, in this particular portfolio. But do I own shares of SCHD in my main portfolio? Yeah, it's in my long-term holdings. So long-term holdings, I do have a couple thousand shares of SCHD in there, and it's been growing, and the dividends have been increasing. So let's go look at the dividend history, and I'll show you what that looks like. So here's all distributions. So you can see even they haven't been super consistent in their dividends, so it's not like a steady line. But if you had to draw a line across here, let's go all, increasing dividends over time, increasing share price over time back to this, has their share price increased over time? Fair to say. Fair to say it's gone up. So if you're like, hey, I want something more stable, and this fits more of your strategy, and you're like, I want stable, growing, and I want stable, growing dividends over time. Look at that chart, where it's going up here, and this fits more of your line of thinking. Then this might fit what you're doing. And I do own shares of this, so not in this particular portfolio, but after I got my bills paid for with passive income, I started looking at how do I stabilize my portfolio over the long term where I can handle market swings. And SCHD was part of that strategy. So, kind of look at these things and see what fits what you're trying to do. I know this is a longer video today, but hopefully this was helpful and, help you on your own research journey. And I can tell you this, the most important thing for me is knowledge and education. I spend all my day teaching business owners how to run businesses. I think that spending a lot of time researching your investments and not making emotional decisions will save you money in the long term. So buy some books. A couple people asked me to recommend some investing books, and I might do that. I'm not an Amazon affiliate or anything like that, but I would maybe go on Amazon and look up some dividend investing books and research those. But here's the thing about those books. They were written at a time before these high yield investments were available. So they're not really written for modern times. So you're going to have to pair that knowledge of how to do dividend investing along with what exists today. So it's going to take some critical thinking and maybe a little bit more research and some time on your part. All right. So with that, have a great day. Happy investing, and we'll see you all tomorrow.